Welcome to my more important analysis videos on Friday the 15th of September with me, Rich Perry, market analyst at Hantec Markets. We've got an interesting theme actually. Basically the markets are fairly settled. They're not moving around too much, and that is a surprise because we had a missile test, another one from North Korea, flying over Japan into the sea, and there was not a great deal of reaction from that. There was an initial sort of knee-jerk move lower into safe haven assets, but that has unwound. And as we sort of sit in the European session, markets are fairly stable. There's not even outperformance on the yen. Dollar yen is actually higher, almost by 0.5% now. Gold is fairly flat, not really doing a great deal, actually trading lower as the dollar has rebounded. And equity markets are broadly stable. Now the sort of caveat to that on equity markets is FTSE 100, which is underperforming again as sterling has continued to climb higher, 34.50. It continues to push higher as the markets take account of that slightly hawkish tilt on the Bank of England monetary policy statement yesterday. Now the dollar rebounding or sort of settling really after yesterday's sort of decline back. And that's sort of come as treasury yields have sort of rebounded a bit today. After initially falling, they sort of have rebounded today. So the dollar is fairly stable today, and that is sort of helping to sort of stabilise market sentiment generally, I think. And what we have seen is just generally speaking, not a great deal of movement really, other than sterling and against dollar yen. So we are fairly stable on these markets today. Now, what are we looking at today in terms of economic announcements? We've got US retail sales, Fed manufacturing and industrial production today. So this afternoon is the main focus. Not a great deal out this morning to get overly worked up about until 1:30 this afternoon, when we've got the Fed manufacturing, which is expected to unwind slightly to 19, but still a strong number that would be. And then retail sales ex autos 0.5% positive on the month. That would continue the improvement in retail sales on the year-on-year basis, and that would actually be retail sales sort of coming up for a strong move back towards sort of almost 5% for the year-on-year data, and then further into the afternoon, we've got the industrial production numbers would be plus 0.1% on the month, which would be a sixth consecutive month of month-on-month gains there for industrial production. So improvement on that data, and also capacity utilisation 76.8, which would be the highest level since early 2016. So some US data out this afternoon. It seems as though that US data has just turned a corner again, hasn't it? A little bit after inflation data yesterday came in ahead of expectations. But my chart today is the sterling. Now, is the FTSE 100. Now, sterling and FTSE 100 have been a negative correlation play, and this continued yesterday and into today. Sterling massively pushing higher out to 12-month highs on sterling, and FTSE 100 subsequently has broken down this big key support. 7,300 had been tested on numerous occasions in the last 3 months, but it's broken down now, closing at a closing low yesterday, and seems to continue that move to the downside today. Another closing low below 7,300 today would be a significant deterioration in the index. We've got momentum indicators which are dropping away, but nothing yet to really confirm a big breakdown, as the RSI tended to sort of find lows in the sort of mid 30s to 40. But 37 is a level at which it's almost close to confirming the breakdown. But certainly another closing breach of 7,300 would be, first of all, a range breakdown of this range between 7,300 and 7,450 that we've seen in the last sort of month or so. That gives you obviously 150 ticks of breakdown. That's 7,150. But you'd be starting to look at these key support levels back from earlier on in the year. So 7,200 would be initially a level to watch. That was an old pivot. But also 7,000, basically 7,100, isn't it? 7,094 was the low earlier on in February. but 7,100 would be the key level. So this market moving to the downside is interesting because Wall Street keeps climbing higher, but FTSE 100 is a bit of an underperformer, isn't it, on that regard? You could argue that equity markets holding up around the world. DAX is holding up strongly, as is the CAC, and also we're looking at Wall Street breaking out into new highs. But FTSE 100 is such a laggard, isn't it? So disappointing for UK investors there. But the breakdown below 7,300 is a deterioration, certainly in the outlook today. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.